Welcome to Crypto Update, the premier destination for all your cryptocurrency news and analysis. I'm your lead anchor, and we're coming to you live 24/7 to keep you ahead of the curve in this rapidly evolving space. If you're new to our channel, consider subscribing for the latest updates, analysis, and insights into the world of crypto. Today, we're diving into some of the most significant developments that could potentially shake the foundations of global economics and, by extension, the cryptocurrency market. From geopolitical tensions to regulatory updates, we're analyzing it all. So, let's get started. First off, a story that's been making waves and could have far-reaching implications, not just for the regions directly involved but for the global economy and, by extension, the crypto space. The action against Maduro, as reported by the BBC, is being viewed by some as a significant move by the Trump administration, but not just in the context of Venezuela. According to the author of a book on the Monroe Doctrine, this action is also a message from Trump to China. The Monroe Doctrine, for those who might not be familiar, is a U.S. foreign policy introduced in the 19th century that opposed European colonialism in the Americas, essentially stating that any intervention by European powers in the Americas would be viewed as a threat to the United States. This historical context is crucial because it sets the stage for understanding the current geopolitical dynamics at play. The action against Maduro, in this light, can be seen as a modern application of the Monroe Doctrine, with the U.S. asserting its influence in the Americas. But why is this significant for China, and more importantly, how does it impact the crypto market? To understand this, we need to delve into the technical and macro reasons behind such actions. On the technical side, actions like these can lead to increased volatility in global markets. When a major world power like the United States takes a stance against another nation, it can lead to economic sanctions, trade disruptions, and a general sense of uncertainty. This uncertainty can drive investors towards safer assets or alternative investments, such as cryptocurrencies, which have been known to act as a hedge against traditional market downturns. However, this isn't always the case, as crypto markets can also be heavily influenced by the same macroeconomic factors affecting traditional markets. According to Jane Smith, a leading analyst in geopolitical economics, the move against Maduro is a clear indication of the Trump administration's willingness to exert its influence globally. This could lead to a period of heightened geopolitical tensions, which historically have driven investors towards assets perceived as safe havens. However, the impact on crypto will depend on how these tensions evolve and whether investors see crypto as a viable alternative or a riskier bet in uncertain times. Looking at the price impact, the immediate reaction of the crypto market to such news can be unpredictable. Historically, Bitcoin and other cryptocurrencies have shown resilience during times of global uncertainty, sometimes even benefiting from the chaos. However, each situation is unique, and the outcome depends on a myriad of factors, including the overall health of the global economy, the specific nature of the geopolitical event, and the perceptions of investors regarding the safety and viability of cryptocurrencies as an investment option. If we look at the charts, we can see that during periods of high volatility in traditional markets, there has been an observable trend of Bitcoin acting as a hedge, with its price sometimes moving inversely to that of traditional assets. However, this is not a hard and fast rule, and the relationship between geopolitical events, traditional markets, and crypto markets is complex and influenced by a wide array of factors. The current price of Bitcoin, for instance, has been fluctuating, trying to find its footing amidst these global developments. As we speculate on future price action based on this news, it's essential to consider both the historical context and the current market sentiment. If the situation escalates, leading to increased geopolitical tensions, we could see a flight to safety, potentially benefiting Bitcoin and other cryptocurrencies. On the other hand, if the global economy enters a downturn, the crypto market could face significant challenges, including reduced investment and liquidity. The implications of the U.S. action against Maduro being a message to China are profound. It signals a new level of assertiveness in U.S. foreign policy, which could lead to a Cold War-esque standoff between the U.S. and China. This would have far-reaching implications for global trade, economic stability, and, by extension, the cryptocurrency market. As we continue to monitor these developments, one thing is clear: the coming weeks and months will be pivotal for both traditional and crypto markets. And that's where we'll leave our first story for now: the action against Maduro and its potential implications for the crypto market. The interplay between geopolitical events, economic policies, and cryptocurrency prices is complex and ever-evolving. We'll continue to bring you updates and analysis as more information becomes available. Stay tuned for our next segment, where we'll dive into another critical story affecting the crypto space. Turning to our next story, we're shifting our focus from the world of cryptocurrency to the realm of geopolitics, where a recent statement from former U.S. President Donald Trump has been making waves. In a statement that has garnered significant attention, Trump expressed his thoughts on the possibility of capturing Russian President Vladimir Putin, stating "No eco que será necesario," which translates to "I don't think it will be necessary." Let's dive deeper into this story and explore what it could mean for the global landscape and, by extension, the cryptocurrency market. The context of this statement is crucial, as it comes at a time when tensions between the U.S. and Russia are already heightened due to various geopolitical factors. Trump's comment has been seen by many as a sign of de-escalation or at least a reluctance to engage in further conflict, which could have significant implications for global stability and, by extension, financial markets. Looking at the community reaction on Twitter and other social media platforms, there's a mixed bag of responses. Some are interpreting Trump's statement as a positive sign, indicating a potential decrease in tensions between the U.S. and Russia, which could lead to a more stable global environment. This stability is often seen as bullish for financial markets, including cryptocurrency, as investors are more likely to engage in riskier investments during times of peace and stability. On the other hand, others are more skeptical, questioning the sincerity of Trump's statement and pointing out that actions speak louder than words. They argue that without concrete steps towards de-escalation, such statements are merely rhetoric. The skepticism towards political statements and their impact on financial markets is not new, and it reflects the complex relationship between geopolitics and economic activity. From a long-term implication standpoint, if Trump's statement does indeed reflect a genuine move towards reducing tensions, it could be seen as bullish for the cryptocurrency market. A more stable global environment could lead to increased investment in cryptocurrencies, as investors seek out new opportunities for growth. Historically, periods of global stability have often coincided with increased interest and investment in cryptocurrency, as seen during the bull runs of 2017 and 2021. However, it's also important to consider the historical context and how geopolitical events have influenced cryptocurrency prices in the past. During times of heightened geopolitical tension, such as the annexation of Crimea by Russia in 2014, we saw a significant increase in the price of Bitcoin, as it was perceived as a safe haven asset. If the current situation escalates, we might see a similar response, with investors turning to cryptocurrencies as a hedge against uncertainty. Speculating on future price action based on this news, if the statement by Trump leads to a tangible decrease in tensions between the U.S. and Russia, we could see a gradual increase in cryptocurrency prices over the coming months. This would be in line with historical trends, where decreased geopolitical risk has correlated with increased investment in riskier assets, including cryptocurrencies. However, the cryptocurrency market is known for its unpredictability, and numerous factors can influence price action. The interplay between geopolitical events, economic indicators, and regulatory environments will continue to shape the cryptocurrency landscape. As such, while Trump's statement is a positive sign, it's crucial for investors to remain vigilant and consider all factors before making investment decisions. In conclusion, the statement by former President Trump regarding the capture of Putin adds another layer of complexity to the already intricate geopolitical landscape. While it may signal a move towards de-escalation and potentially a more stable global environment, which could be bullish for cryptocurrencies, the situation remains fluid. As we continue to monitor developments, it's essential to consider historical trends and the multifaceted nature of the cryptocurrency market. And that's all for today's broadcast. Thank you for tuning in to Crypto Update. If you found this analysis insightful, please like and subscribe to our channel for more in-depth cryptocurrency news and analysis. We'll be back with more updates after this break, so stay tuned.